Well, thank you all for having me. My name is KATELYN McCULLOCK. I am the director of the Livestock Marketing Information Center. And today we're going to talk about U.S. cattle and beef systems adjusting through the COVID-19 event. My organization is a nonprofit, and we cooperatively work with 27 U.S. land-grant universities, 13 associate members, which are trade organizations largely, and then USDA. And a lot of the data that we source and that you'll see today is available through those USDA agencies. So a couple of things when we're talking about this pandemic and what to look for after the pandemic. One thing to keep in mind is that we're still very much in this, and the uncertainty around what's going to happen with the virus coming this fall for the US, whether there's a vaccine and the economic picture are still very much up in the air. So against that backdrop, I'll provide the caveat that a lot of things are still uncertain, but there's a couple of things that I think we can take away from it at this point in time. And those three things I've outlined on this slide. So the US is going to continue to focus on developing high quality beef that's really going to provide an enhanced eating experience for the consumers. And that's been a long-term trend that we've been working on through genetic gains. The other situation is supply chain factors. We saw significant disruptions here with the COVID-19 event, specifically related to slaughter plants closing. And then lastly, where does beef demand go from here? And do consumers' tastes and preferences look as they did before the pandemic? So in the US, we have a breakdown of quality grades of 5 different distinctions for fed cattle. Prime and choice are the top 2 tiers, and this graph shows you just the uptick in that percent graded choice. So this is what percent of graded cattle register under this choice category, and that's the second level. Prime is the highest in the US, and you can see that growth curve has continued to climb. Now this is a relatively short-term trend, and a lot of it has to do with an increase in the number of dress weights, an increase in dress weights that we've seen fed cattle increase to as they've had to remain on feed longer because of the slaughter situation. But longer term, we've really seen an uptick in the percent grading prime. That's that highest category in the US. So from 2015 and 16, we were sitting about 5% of carcasses were grading prime. Now in the first half of 2020, we're closer to 10%. So that's an enormous change over a fairly relative short period of time. And that's really been focused on both increasing the number of days on feed, putting a lot more investment in genetics towards that heavy marbling, and increasing that eating experience. The other thing that we've seen more specifically pandemic related is how cattle producers are being paid. And so in any black swan event, it's a little up in the air how these market trends kind of sort themselves out. But these are the main groups in this graph of how the US is going to sell cattle. So we have negotiated, which is largely a spot market price. So that's anything that's going through an auction situation or being outright bid when it's ready to be delivered. And then these other ones are more marketing arrangements that deal with other types of relationships. That dotted black line on the bottom used to be close to 5% or so of transactions. And during the COVID event, that negotiated grid has really jumped up to over 20%. And part of that is because you're seeing those prices increase because of all the carcass quality characteristics that are adding to that bottom line for that animal. And so a little bit unique here for the COVID event, but part of that is the increase in prime. And so folks that are able to price cattle on a negotiated grid are getting paid more, and you've seen more interest for those producing higher quality cattle. They're going to want to benefit from that and change their transaction type to something that really benefits them. On the supply chain side, the US had several plant closures, not specific necessarily to beef, but since this is a cattle presentation, we'll focus there. And a lot of it had to do with the health and safety of workers. So one thing to keep in mind in the US is that it's a decentralized health system. So initially those decisions to close or keep plants closed or open were very much at the county level or the state level. The President Trump did put in an executive order to move that decision to a federal essential essential worker level. And so that mitigated some of the closures, but still all these supply chain processes needed to put in place personal protective equipment to ensure the health and safety of workers. And that's what the system we're operating on today. It's not that we can't close plants, it's that we're doing a lot more testing. We've put in personal protective equipment, dividers. In some cases, we've spaced the workers on the line in further distances and slowed change speeds to accommodate that. I think that is probably a longer term trend that we'll see in the US beef industry, especially until we have maybe a vaccine or something more concrete to be able to deal with COVID-19. And so some of those changes are really depend on where the virus goes from here. On the feedlot side, again, we backed up significant numbers of cattle into the feedlot in that they weren't able to move through the slaughter system at the normal speed that they were. Changes on those, I think, are going to be less substantial. It's really more of a short-term thing in terms of managing cattle rations, managing weights, deciding what cattle need to be marketed when there is space available. The bigger long-term trend that we probably don't know for sure what's going to happen is how the supply chain is going to handle animal to market delivery. So the US is very much what we would call a just-in-time system, where from harvest to either shelf space or food or restaurant is a very quick window. It's not necessarily getting routed to cold storage. We consume a lot of fresh product up here, and slaughter plants too are making a lot of case-ready products. So when you have a disruption at the slaughter level, it really slows down the whole system. There isn't necessarily a lot in cold storage that is able to go through those supply chains if you do have a significant impact at that level. And I think some of this depends on timing. We seem to have really worked through the slaughter situation in the US, and so maybe there aren't necessarily the need to put in safeguards. But for example, in the case-ready system, grocery stores and other retail places no longer really have the back-end space to fabricate a carcass or a primal on their own. And so some of that has just gone away with this transition in the industry. And if we see some of that come back, that would potentially be a risk mitigation strategy for a retailer. But we don't necessarily know how much that's going to just change. When you have a just-in-time system, distribution, logistics, and cold storage all sort of fall into that time frame as well. We don't have a ton of cold storage where you could move to a system where you're storing a lot in a frozen system and then moving it. You'd have to build all that infrastructure. So again, I think it depends on how long the virus takes to get under control and what sort of safeguards we need to invest in that infrastructure. One thing that I do think, though, is absolutely going to change is further automation. So one of the keys here to shutting down these slaughter plants and closures was absenteeism related to workers either being fearful to come to these plants because of the exposure load or actually physically being sick. And based on how tight the labor market generally was in the US at that time, that's really created the perfect storm of just physically not getting enough labor into these jobs that are skilled and couldn't necessarily just autofill from whoever was available. And so I do think you're going to see a more aggressive movement to automation in these sectors where you can. Just really quickly, here's a graph of the cattle slaughter. We expected about a 14% decline in second quarter slaughter, so a fairly big dip from a year ago. And you can see by the end of June, we've largely moved past these. So again, it matters how quickly we can continue to slaughter at what we consider normal levels. But again, we have a lot of systems in place now to protect health and safety, and so reaching those levels takes a different strategy than it did before. And one of those strategies that's been employed is a Saturday harvest day. And you can see that by the level of Saturdays that we've slaughtered above a year ago. So we're expecting that to continue in order to meet the slaughter levels that were similar to a year ago in order to keep those cattle moving through the system. So I mentioned cattle being backed up on feed. Almost all of the fed cattle in the US are going to move through a feedlot on some type of grain finishing ration. The number of cattle on feed, although it's below a year ago, we actually have a substantial higher number of cattle that have been on feed longer. So longer days on feed, meaning they've been in that feedlot a significantly longer portion of time. So right now, we have about 1.1 million head higher than last year that have been on feed for more than 120 days. So a significant uptick in just that specific category. Now to work through those cattle numbers and to move those cattle from a maintenance ration or hanging back in those feedlots, you're going to need those slaughter levels to continue at least above a year ago, if not higher, in order to move through that backlog and to have a more normal feedlot system mechanism in place. So all of these things are really wrapped up though in how much the consumer can purchase beef, what the interest is from a beef demand perspective. So the first half in the US was largely a supply situation where we were struggling to maintain that throughput of having cattle be fed, be slaughtered, and make it to the grocery store. In the second half of the US, we perceive that the slaughter plant situation is largely going to be well controlled, even if the US has another significant wave of coronavirus. That remains to be seen. So we're optimistic that that would not result in a slaughter plant closure. But the second half of the US is we're really focused on how well the consumer is going to be able to afford beef, and not just in the US, but worldwide. So the US has entered a period of recession, as has the world. The world economies are going to struggle to move forward. And in a general sense, beef is more expensive than these competing meats. The US is still largely a US facing market. And so the domestic consumer sentiment is important. We're looking at fairly low levels, not quite as low as the Great Recession for the US in 2008, but still substantially lower than where we were in 2019. And we'll really need to see the economy pick up in order to see a lot of movement from a beef demand side. So there's the economic implication of consumers not maybe wanting to spend as much on food, but there's also still the restaurant implication. So in the US, we say it's about a 50-50 mix pre-coronavirus between what you would consume at home and what you would have consumed outside the home. Obviously, during coronavirus, with restaurants completely shut down for several months, we've moved completely to being in the home, and now we're only gradually starting to see those areas open back up. Now, I think the interest in the U.S. consumer to partake in those specific areas is going to be relatively slow, and folks aren't necessarily going to rush out to participate in restaurants, and so that's going to be a significant headwind for U.S. beef moving on the domestic market. Now, on the world market, again, it comes down to affordability. What are their protein alternatives? Exchange rates come into play, all of these things. And so far this year, U.S. beef and veal exports had a fairly strong first quarter, but ever since the U.S. really shut down and had this widespread number of cases, U.S. beef and veal exports have dropped off. Now, some of that is U.S. beef became much more expensive when we had slaughter troubles, but the U.S. dollar also improved relative to other currencies during the May timeframe as well. U.S. beef has become less expensive and so may be more attractive as we move forward. And this chart just simply says, the U.S. is a net importer of beef, as it is, so we still are importing quite a bit more beef, and when beef became more expensive, you can see this level really jumped up. I don't think that's necessarily going to change with coronavirus or post-pandemic. The U.S. consumes a substantial amount of beef, and we'll still need to import post-pandemic as well. So the big question is maybe how well positioned we are moving forward after the pandemic, and to me it comes down to how big of an impact it has on the economics of those that are producing the cattle. So from the cow-calf operations to the feedlots to the packers. Now, packer margins have been very strong post-pandemic, or excuse me, during the pandemic. Post-pandemic, probably not going to see a lot of changes there. On the other side of that, though, the U.S. has also already been in a contractionary phase, meaning we have about every 10 years we see cow numbers have a peak or a trough, and so we were already starting to see less cow numbers last year, and I think the pandemic will just accelerate that in terms of this cattle cycle. So those two dotted lines you see are kind of our best guess at where the numbers are going to fall moving forward, subject to change. But this definitely put more pressure on the cow-calf people to look at their financial situation and understand how much uncertainty they can deal with. We did see an uptick in beef cow slaughter numbers. So this is that cow-calf herd. It's been above a year ago for the last several weeks, but I think a lot of that is residual from the slaughter disruptions we saw in the beginning part of the year. And ultimately, we are still estimating the cow-calf side of things to have a positive year over year. And I think that largely depends on how optimistic the the cattle industry is coming this fall. That's when the majority of our calves are going to be sold, and that's ultimately going to determine what that bottom line is and how much liquidation we see in the future. So a couple things to just wrap up. Again, we're in the midst of this pandemic, so it's still really early to call for widespread change from a structural standpoint. This isn't just affecting cattle and beef markets, but it's also rippling across the food sector. So from a labor perspective, we're struggling to get fruits and vegetables harvested. Other systems that have heavy labor participation in food service are also dealing with labor impacts, maybe just not on as wide of a scale as maybe the slaughter facilities have. We have seen a change in purchasing patterns. When you move completely to a retail side, all of a sudden we had an entire country asking, what do I cook and what do I cook every single night? We are cooking all of our meals at home for a significant portion of this, and that has changed what we're eating compared to what we're going to ask someone else to prepare for us. Now, some of us have become better chefs and experimented quite a bit. Others have stuck to more tried and true comfort type foods. And I think those patterns aren't necessarily going to have long-standing issues unless you continue to feel like you would not want to participate in the restaurant sector. And if you're going to continue to cook at home. In general, I think we are going to cook up more at home than we did before. So maybe you see that 50-50 at home versus outside the home ratio change a bit. But ultimately, it's going to depend on how fast we start moving back into that restaurant sector. One note I would say is that COVID-19 has emerged to be in everyone's minds, but before that, we were dealing with African swine fever in Asia. And I think that's going to reemerge as a big factor moving forward. And ultimately, before COVID-19, all production export-oriented countries were focusing on that, on how do we grow our protein source to export to these countries that are going to have a shortage. And I think that will continue to be a factor. And it's right now in the shadow of COVID-19, but I think that'll be probably a longer term protein supply chain shaper than maybe COVID-19 has been this year. Again, a lot of questions about the virus and what happens next, but hopefully this has given you some things that we're thinking about. And thank you again for your time.